We are Go Billions.
Hi, Ronald. Thanks for joining us today.
Thank you for having me.
Our Go Billions Forex expert.
I'm going to talk a little bit about Forex today. It's pretty exciting. Forex is actually a $1 trillion market. It's actually the biggest financial market in the world. And a lot of people take part in Forex because it's just so lucrative, and this is where a lot of big banks do their investing.
Today is our first video. We're going to do a 3-part video for you guys. We're going to start you off with terms and definitions. So if you don't know about Forex, this is going to be your first step to getting you to where you need to be. What terms do you feel our audience needs to know before they get started?
Understanding the currencies.
What is a currency?
USD stands for the US dollar. That is the major currency in the world that most people invest in and that most people trade. Another currency is euro. It's also known as the euro dollar. People in London and people in European countries, that's their main source of currency. Third major currency is the Great British Pound. That's actually called GBP. That's also one of the world's major currency. And then another major currency is the yen. That's also that's the Japanese currency. Another major currency we have is the Swiss franc, the Australian dollar, and the New Zealand dollar. So those are the 7 major currencies, and all 7 of the major currencies, they all have the US dollar involved with it.
All right, so now that we know what the currencies are called, what's the point of doing the Forex trade? What are you buying?
Forex is, we've all heard the terminology of buy low, sell high. So when a currency is going down, then that's at a point where you may be looking to buy, or you may continue looking to sell as well. Or if you see a currency is going up, you may be looking to buy that currency, as well as when it gets to a point where you may look to sell. That's another strategy as well.
So you make a profit pretty much by selling when the currency is high.
Absolutely. So the way it works is that there's different pairs. So one of the major pairs is Euro USD. So you have the euro and you trade it against the dollar. You're expecting the value of the euro to go up compared to the value of the dollar. So you may buy that currency.
So when do you know when it's time to sell? How? Do you have a special way of figuring it out, or is it just a guessing game?
It's definitely not a guessing game. You lose a lot of money guessing in Forex. There's a lot of different strategies, but one of the main points where people look at major banks and people like myself, we look at points in the market where it has turned. So if it reaches a certain price or a certain level and you look back and it has turned at that price, you may be looking to sell that currency.
What are some different strategies that you personally use? I know there's a carry trade. Can you explain that for our audience?
Sure. So the carry trade is actually one of the most famous trades in Forex. And basically what you're doing is it's a long-term trade. So you may be holding this trade for a couple of months or maybe even a couple of years. The currency is going to be devalued and you're going to make profit off of that. And we'll get into that at a later time. So you make money that way. And then the second way you make money on that trade is by the carry. So every day that you carry over that trade, you make money based off the interest rate off the currency that you're selling. So it's a long-term trade and you make money 2 ways.
Okay, is it a risky trade?
It's not a risky trade, and you're holding it for a long period of time, so it's just having patience to watch it play out.
Okay, is there any other strategy that you personally use that you would recommend our audience?
Support and resistance. So I look at resistance as the ceiling, and support is basically like the floor, and that's what I was saying, that's when you know when the market turns. So we call resistance is an area where price has turned maybe 2, 3, or 4 times, so you may be looking to sell that currency, and then support would be when price is basically at like a floor level and the price has hit that level about 3, 4 times, you may be looking to buy that currency. So that's one strategy that a lot of people use like myself.
Ronald, can you tell us about hedging and rollover?
Let's say you buy a currency and maybe you're down in that pair, you can hedge against it, and you can also sell that currency while you're buying it at the same time to maximize profits or reduce loss.
What is a pair when it comes to doing business with the Forex?
Trading the dollar against the yen. So if you're buying the dollar, that means you're devaluing the yen, and vice versa. So that's basically a pair. It's two currencies. Okay, so you have the base. The base is the first pair. So that's the pair. You're betting on that pair. Okay. So if you have the U.S. dollar, you want to buy it. So if it's U.S. dollar versus whatever that second pair is, then you're buying against that pair. The second pair is called the quote currency. Okay. So that's basically if I'm buying the U.S. dollar against the yen, the quote currency, that means I'm selling that currency.
Rollover. How does rollover apply? What is the process of doing it, and how can it be beneficial to us?
Sure. So rollover basically is called swing trading. So if you're swing trading, you're trading for maybe a few days or a few weeks, and let's say just a few days, and rollover is you're profitable in your trade. Every day that goes by, you may have to pay rollover into the next day, depending on how large your position is. That rollover could be high, it could be low, or it can even be a positive rollover depending on the currency that you're trading, but it's all based off day to day.
Can you define PIP and how that applies to our audience and how it's important?
So the majority of the currencies, the pairs, you actually get paid on to the fourth decimal place. So you want to pay very, very attention when that number goes up to the next tenth or below the next tenth, because that's basically how you get paid. So it's very important to know that.
Okay. What is an indicator?
The indicator is basically something that you would put on your chart while you're trading to help you make an entry when you're about to buy a currency or sell. So for instance, one of the major indicators, I use something called RSI, which is the relative strength indicator, and it basically lets you know when a pair is probably overbought or way too high, or let you know when a pair is way too low, when we call oversold. So that's a great indicator, and it's basically like a squiggly line on the chart, and you'll see in one of the other videos basically how we use that to help perfect our trades.
How does the Forex market differ from the markets that you're currently in? Because you work with us on a few other things. What's the difference?
Sure. So the difference between a Forex market compared to stock or real estate, Forex is a 24-hour market closed on Saturdays. The stock market typically closes 4:30 or 5 o'clock. You trade whenever you want. You can make your own hours, and it's the most liquid market out of any market in the world.
Thank you so much, Ronald. So check us out. Stay tuned. Please subscribe, follow us.